Hi, good morning this morning. This is Malan KB and this is video 10 of this course, and that is forex starter kit. And in this video we are going to start and go deeply into um, what is it called, technical analysis. Let's start with let's start with uptrend. Now, what do we mean by uptrend? When we say uptrend, that is the market is moving upward. That's the overall chart of the market is going in an upward direction. That is the price action of the market is going up. While if we say a downtrend, that is the market is going down, is going downward. The market is going in a downward direction, in a downward direction. You understand? So, um, and the third one is the market moves in a ranging direction. That is not going upward and not going downward. That is, it is consolidating in one place. The market is not going beyond certain price and it's not going above certain price. So we have three types of market movement. We have the uptrend, we have the downtrend, and we have the ranging market. Now if you look at this whole chart, this shows that right now the market is moving in an upward direction. That is, the overall market is an uptrend. Why? Because the market started here and created this higher low, this higher high, higher low, higher high, higher low, higher high again. So the market has been moving upward, upward, upward. So this is to say that the market is moving in an uptrend. While if we come back here from this position, from this place, the market has been coming down, coming down, coming down, coming down, coming down. It still went back here, but still comes back. It kept coming back until this point where the market changed character and started moving in an upward direction. So this is what we mean by an uptrend and a downtrend. If market is going up, we call it an uptrend. If market is going down, we call it a downtrend. And if market is consolidating, just look at this point from here to here, this rectangular movement. I think let me just mark it for you so that you'll understand it better. Let me get a rectangle box. Let me get a rectangle box. I'm looking for a rectangle. Okay, here is the rectangle. So from here to this point, the market has been ranging. We call this ranging market because the price has not gone beyond this line, and it has not gone beyond this line, and it has not gone above this line. That is, the market has been ranging here. The market has been ranging. So that's ranging market, and that's the three types of market movement. That is how the market moves. Okay? Sorry. So now let me explain more about the sorry. Okay. So now how do we understand, or how do we recognize a market movement that the market is moving in an upward direction? Now, if market is creating what we call higher high and higher low, that is, market is in an uptrend direction. Market is moving in an uptrend. Now, what is this higher high and higher low? Now, you need to understand that market does not move in this direction. Market does not start from here and keep going up, going up, going up. No. and market does not come back like the price should be coming down, coming down straight in a straight line. No, market move in a zigzag direction. That is, it comes here and go back, it comes here and go back, it comes here and go back, it comes here and go back. That is how the market moves. So that zigzag movement is what we call, the market is creating higher high and higher low. So now let me show you how the market moves in a zigzag, or in creating a higher high and a higher low. Let me get the parts too. So, okay, sorry for now. Let me get a fresh page where I can draw and you can see. Okay, yeah, this is a fresh page. So now this is how the market moves. Okay, so this is the movement of the market, and this is an uptrend. Market is moving in an uptrend direction like this. Now market is also creating what we call higher high, higher low. So let me cycle. Okay, let me cycle all these points. Okay, so this point you are seeing, we call it higher high. Okay, let me write higher high there. Let me just change the color so that you understand better. This is called, sorry. Okay, let me write higher high. So this is higher high, while this place is higher low. Sorry, I want to write here. I don't know what's the problem. Okay, this is higher low. This is higher high. This is also higher low. This is higher high. This is higher low. Higher high and higher low. So these are the kind of movement, or what market always creates when it's moving in an uptrend direction. While if the market is moving in downtrend direction, the market is creating higher high, higher low, and lower high and lower low. So let me draw it for you so that you see. Okay, so this is what the market is creating. Let me cycle it for you. Okay, okay, these are the higher high and the higher lows that the market is creating. Okay, this is lower high and this is lower low. Lower high, lower low, lower high and lower low, lower high and lower low, lower high, lower low. So this is what the market is creating. If the market is moving in a downtrend, it's creating lower low and lower high. This point is the lower high and this point is the lower low. This point lower high, this point lower low, this point lower high, this point lower low. So now there's another thing that the markets always create, which we call it the, 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 the break of structure. The break of structure. Now from here to this point, we have a break of structure. From here to this point, another break of structure. From here to this point, break of structure. From here to this point, break of structure. Also, from here to this point, break of structure. 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 Now, what do we mean by this break of structure? Now, let me just write BOS, break of structure. Okay. BOS. I don't need to write them all so that we can save time. BOS, break of structure. BOS, break of structure. Now let me explain what these break of structures are, or what do they mean. Now let me use this uptrend as an example. Now if the market is moving in an upward direction, creating higher high and higher low, now you must have this higher high and higher low for your uptrend to be valid, and you must have a break of structure. Now this higher high is a structure. When the market created the higher low, when it come back to this higher high, it didn't go back at that exact point. It broken this structure, it pierced it, it went up before coming back to that same higher high, or going below it a bit before going and breaking this structure again. This point is another structure. I will show you live example in the chart. So it broken here again and moved upward before coming down for a retest. Then it went up again, broken this place and come back for a retest and go up again. The same thing here. When the market was going down, it didn't continue going down straight. It went back, then comes back here, but it broken this place and go down before coming back to tap this zone and go back again, broken this place. So that is what we mean by break of structure. And I'm going to tell you what we use this higher high and higher lows and this break of structure very soon. But I need you to understand how this market movement is, how this lower high and lower low, how this break of structure is been. So now let's go to the chart. Let's go to the chart and see. You are not going to see it as clean as this. It's not going to be straight as this. This is just an illustration, a demonstration. But this is how you are going to see it, because it's a candle chart pattern. Now let's draw our uptrend movement here. So let's start from here. If you are drawing a chart, you look for the last or the lowest candle movement, then you go up. So now let's click it from here. Then market comes here, tap here, then market comes back here, come back here. There are certain places you have to ignore to get a clean chart. The market comes here, come back here to this point, Market move again to this point. Market comes back here. Market move up to this point. Market then start coming back. But for now, let's just take here for as our own case study, or rather, I think let me draw it again. Let me draw it again. Okay. Or rather, let me just get a very clean movement so that we will have a clean drawing. I want you to understand this very clear. That's why I want to look for a very good and clean. Good. We have a very clean one here. Okay. So now this is where the market started moving up to this point. The market comes back here. Market move up here. Market comes back here. Market move up here.